Hey crypto enthusiasts, welcome back to Zaki Crypto Update, your go-to channel for the latest insights and analysis in the crypto world. If you're new here, don't forget to smash that like button, hit subscribe, and ring that notification bell so you never miss an update. In today's video, we're diving into Ripple XRP and the recent headwinds it's facing as more holders choose to cash out. Is this a temporary dip, or are we looking at a more extended decline? Let's break it down. Ripple's XRP token has been facing some significant downward pressure lately, and it's raising eyebrows across the crypto community. Currently trading at $0.56, XRP has experienced a nearly 10% drop over the past week. This decline has been largely driven by a wave of profit-taking among XRP holders, creating a challenging environment for the token's price to maintain its previous levels. Profit-taking is a common phenomenon in the crypto market, especially when an asset's value reaches a point where a significant portion of holders are in profit. In XRP's case, the situation has become more pronounced due to several key metrics that we'll explore in detail. But first, let's take a closer look at the broader market conditions that have influenced XRP's recent price action. The overall cryptocurrency market has been experiencing a mix of volatility and uncertainty in recent weeks. While some assets have managed to hold their ground or even see slight gains, others like XRP have struggled to maintain upward momentum. This is partly due to the broader macroeconomic environment, where factors such as regulatory uncertainty, interest rate hikes, and global economic concerns have contributed to cautious investor sentiment. For XRP specifically, the ongoing legal battle between Ripple Labs and the U.S. Securities and Exchange Commission (SEC) has also played a role in shaping market sentiment. While Ripple scored a partial victory earlier this year, the possibility of an appeal from the SEC continues to loom large. This uncertainty has likely contributed to some holders choosing to cash out their profits now rather than waiting to see how the legal situation unfolds. One of the most telling indicators of the current market dynamics for XRP is the market value to realized value MVRV ratio. As of now, XRP's MVRV ratio stands at an elevated 48%. But what does this figure actually signify, and why is it so important? The MVRV ratio is a metric that compares an asset's current market value to the average price at which its circulating supply was acquired. In simpler terms, it helps us understand whether an asset is overvalued or undervalued relative to its historical acquisition costs. A ratio above 1 indicates that the asset is trading at a higher price than its average purchase cost, often leading to increased selling pressure as holders look to lock in their profits. When we see an MVRV ratio as high as 48%, it's a clear signal that a significant portion of XRP holders are in profit. This situation tends to prompt a wave of profit-taking as investors seek to realize their gains before the market potentially corrects. The current wave of selling pressure on XRP can be directly linked to this elevated MVRV ratio as holders move to capitalize on their profits. To better understand the potential implications of the current MVRV ratio, it's worth looking at past instances where XRP's MVRV ratio reached similar levels. Historically, when XRP's MVRV ratio has approached or exceeded 40%, it has often been followed by a period of price correction. This is because at such elevated levels, the market typically becomes saturated with sell orders, outpacing the demand from new buyers. For example, during the 2021 bull run, XRP's MVRV ratio spiked several times, each time leading to a short-term price correction. While the overall trend remained bullish during that period, these corrections were significant enough to shake out weaker hands and create temporary dips in price. The current situation appears to be following a similar pattern, with the MVRV ratio once again acting as a leading indicator of potential downward pressure. Another crucial metric to consider is the network realized profit loss (NPL), which provides further insight into the current state of XRP's market dynamics. The NPL metric essentially measures the net profit or loss realized by traders on a given day by comparing the selling price of an asset to its acquisition cost. Positive NPL values indicate that traders on average are selling at a profit, while negative values suggest that losses are being realized. For XRP, the NPL metric has consistently shown positive value since the start of the month. This indicates that the majority of recent transactions have been profitable for sellers. While this is positive news for those who have already cashed out, it also means that the market is currently experiencing a high level of selling pressure, which is contributing to the ongoing decline in XRP's price. The relationship between NPL and market behavior is crucial to understanding the current situation. When a large number of traders are selling at a profit, it creates a feedback loop that can accelerate the downward trend. As more traders see the price begin to dip, they may be prompted to sell their holdings as well, leading to a cascade of selling pressure that can push prices even lower. Profit taking is a natural part of any market cycle, but its impact can be particularly pronounced in the volatile world of cryptocurrency. When a large number of holders decide to cash out their profits, it creates a supply-demand imbalance that can lead to significant price declines. This is especially true when the profit-taking activity is widespread and not offset by a corresponding increase in buying interest. In XRP's case, the current profit-taking wave appears to be driven by several factors, including the high MVRV ratio, positive NPL readings, and broader market conditions. As a result, the token's price has struggled to find a stable support level, with the potential for further declines if the selling pressure continues. Another important indicator that we need to consider is the Chaikin money flow CMF, which provides insight into the flow of capital into and out of an assets market. As of now, XRP CMF is in negative territory, indicating that there is more money flowing out of the market than into it. The CMF has been below the zero line since August 11th, signaling a period of sustained market weakness. The CMF is a valuable tool for gauging the overall strength or weakness of an assets market. When the CMF is negative, it suggests that sellers are dominating the market, with more capital exiting the market than entering it. This is typically a bearish signal, especially when accompanied by a declining price, as we're currently seeing with XRP. A negative CMF can also indicate that traders are moving their capital into other assets, potentially seeking better opportunities elsewhere. This outflow of capital can exacerbate the downward pressure on an asset's price, making it more difficult for the price to recover. Given the current market conditions and the indicators we've discussed, what can we expect for XRP in the coming days and weeks? There are a few potential scenarios to consider, each with its own set of implications for the token's price. Continued decline to $0.52. If the selling pressure remains strong and new demand doesn't materialize, XRP could see its price drop further to around $0.52. This level represents a potential support zone, but it would also signal a significant decline from the current price, reflecting ongoing market weakness. On the other hand, if XRP can attract new buyers and increase demand, it may be able to stabilize around the current levels and potentially recover to $0.60 or higher. This would require a shift in market sentiment, possibly driven by positive developments in the broader crypto market or within the Ripple ecosystem. Lastly, there is the possibility that XRP could enter a more extended bearish phase, with prices continuing to trend downward over the coming weeks. This scenario would likely be driven by continued profit-taking, weak market sentiment, and ongoing uncertainty surrounding Ripple's legal situation. For XRP holders, the current situation presents a challenging environment. The combination of high MVRV ratios, positive NPL readings, and negative CMF signals suggests that the token is facing significant headwinds. However, as with any market, conditions can change rapidly, and it's important to stay informed and make strategic decisions based on the latest data. If you're considering buying into XRP or adding to your existing holdings, it's crucial to weigh the potential risks and rewards. While the current dip may present a buying opportunity for some, it's equally important to be mindful of the factors driving the price decline and the potential for further downside. For those already holding XRP, it may be worth considering whether to take profits now or hold on in anticipation of a potential recovery. As always, diversification and risk management should be key components of your investment strategy. And that's a wrap on today's in-depth analysis of Ripple XRP and the headwinds it's currently facing. If you found this video helpful, make sure to give it a thumbs up and share it with your fellow crypto enthusiasts. Don't forget to subscribe to Zaki Crypto Update for more in-depth analysis and the latest updates in the crypto world. Drop your thoughts in the comments below. Do you think XRP will recover, or is this just the beginning of a more significant decline? Thanks for watching, and until next time, stay safe and keep investing wisely.